Wide variety of opportunities represented in this week's top pick list here from the Roundtable, folks. Tracy, we start with you. You're in the fertilizer group.
Yes, Agrium, ticker AGU. I know I've talked about them in the past.
Yeah,
I like this group a lot. They are really good right now in terms of valuation. They're trading only 11 times. They're Zacks number 2, but they've been in the news because there's been some activist shareholders trying to split the company into two. They have the fertilizer business, they have this big retail business where they supply products to the farmers, and some people think that they should be split into two to get maximum value. Okay. The company doesn't think that, so they've been fighting them. So there's all this noise around the stock. But the agriculture sector looks really good going into 2013. They're supposed to have close to record income again, so they're going to be buying the fertilizer, and Agrium does do the nitrogen fertilizer, which is really hot this year, and they are able to maintain the higher prices. Mm-hmm. And the farmers are going to have the income to go buy the seeds and everything else that the retail side sells. So at 11 times, and with estimates starting to go up, but they don't report until later in February, so we'll hear more. You know, this is a good play on the agriculture sector, especially at this price point.
Okay.
And especially if natural gas prices remain low, because this is a big component for
the nitrogen side, yeah, that's helping them too. Yeah. So yeah, they kind of have a good area, a good niche right now.
They're in a good place.
Yeah.
All right, Eric, you've got an ETF, no surprise there, but a China ETF, no less.
Exactly, a China consumer fund. I was waiting until Tracy wasn't on the panel doing, but no such luck. China's coming back pretty strong, and this fund focuses in on their consumer sector. It's got big in their food and automotive spaces, so it's got a nice mix of discretionary and staples. And it's got about 40 stocks in the portfolio, and if you're an investor in a fund like FXI, which is the most popular Chinese fund, you have no exposure at all to the consumer sector in China. Mm-hmm. So this could be a nice play to get some more well-rounded exposure to the second biggest economy on Earth. And China hasn't been that, hasn't seen a huge run-up like some of the other markets have. Mm-hmm. So you're not going to be buying in at 52-week highs with this fund.
Okay. Kevin, you have a consumer products company, a company that makes tissue, no less.
Hey, here we go. I'm using their product. We're basically Kimberly-Clark, ticker KMB. They are one of the leading consumer staples product companies in the first largest economy in the world. They manufacture a lot of products that we all use in our everyday life, not the least of which is tissues, diapers, venom products, all sorts of different stuff. Mm-hmm. For a lot of people, they may look at Kimberly-Clark as kind of like a boring pick, but to be quite honest with you, I'm completely okay with this boring pick because traditionally a consumer staples company generally is considered to be a more defensive play in nature, and eventually the market is probably going to have a correction. So given the very nature of this stock, I think that there's plenty of upside, and I'm going to say why, but I also believe that if there is going to be some pressure on the market, given its low beta, I think this one is probably going to hold up better than so many others out there. But if you look at what's happening with them, the consumer staples sector is actually the second best Zacks ranked sector out there. So you already know that you're in good company. Projected earnings look good. They only have a 7 or an 8% growth rate for each of the next 2 years out, but that's solid and it's pretty good considering the group that they're in. Valuations look good, sales are up, earnings are at record highs. They just reported a short while ago. They posted both a positive EPS surprise, positive sales surprise, where everything looks fantastic. If you look at it chart-wise, though, they just broke out to the upside. So seeing that they've broken out, and then if you take a look at the accompanying volume, the volume has been awesome. So you can see that professional investors are accumulating this stock. So it really is in an accumulation phase. And since institutional investors take quite a while to be able to build a position, I think an individual investor can ride that bandwagon right now. Short term, I think the Kimberly-Clark can hit right around $100. That's about an 11% increase from where we are today. Longer term, which is really over the next, let's say, 12 months, 15 months, I think that KMB can get to 115. That's about a 27% increase from here. So I think it's a fantastic pick. Bit boring, but I think you don't have to sacrifice gains for this safety. It's a good stock.
Okay. Don't forget, you can check out other articles written by these folks on our website, zacks.com. If you're not there already watching this video, check back frequently because their articles change frequently. With everyone here, I'm Terry Ruffalo.